Hey there, future financial wizards. Welcome back to the channel. Today we're diving deep into one of the most talked about concepts in the world of investing, diversification. But here's the twist. We're not just going to say, yup, diversify and you'll be fine. No. We're going to look at different opinions and points of view on the matter because, let's be real, everyone has an opinion, especially when it comes to money. Is diversification the lifeboat that saves you from the raging seas of the stock market? Or is it just an excuse to throw a bunch of random stuff in your portfolio and hope for the best? Today, we're going to break it down and see which side of the fence you should be on. Spoiler alert, the answer is more complicated than you might think. So, grab your favorite beverage, kick back, and get ready for a fun ride through the world of investment diversification. Let's see what the experts have to say. All right, before we dive into the pros and cons, let's start with the basics. What is diversification? Essentially, diversification is the strategy of spreading your investments across different asset classes, like stocks, bonds, real estate, commodities, and maybe even a little bit of cash. The idea is that by spreading your money around, you reduce the risk of any one investment dragging down your entire portfolio. It's like if you're throwing a party, instead of inviting only your one friend who brings the best snacks, you invite a variety of friends, each with their own contributions, so that the party is well-rounded, interesting, and most importantly, not a disaster. That's diversification in a nutshell, spreading your bets. So when one thing crashes, hopefully, the others keep you afloat. All right, let's start with the folks who swear by diversification. These are the people who will tell you that diversification is a no-brainer. Let's look at why this argument is so popular. First, risk reduction is the biggie. Diversification helps protect you against the big crashes. Imagine you invested everything in just one tech stock, and then the stock market takes a nosedive. All that hard-earned cash can evaporate pretty quickly. It's like betting your entire portfolio on a single airplane and watching it crash into a car. Not fun. But when you diversify, you spread your investments across different sectors and asset classes. If one part of your portfolio takes a hit, other parts, like real estate or bonds, might still be doing just fine. It's like having a backup plan, or two, or three. Secondly, diversification can help smooth out the bumps in your portfolio's returns. Let's say the stock market is down 1 year, but the real estate market is up. Your overall returns won't be as extreme, and that stability is what helps investors sleep at night. Because let's be real, no one wants to be staring at the ceiling at 2 a.m., wondering if their life savings is about to go up in flames. Now, let's switch gears and talk about the people who say, hey, don't get too crazy with diversification. These are the folks who argue that over-diversification can actually hurt your returns. Sounds shocking, right? But hear me out. Imagine you've got a bowl, and you're adding tons of marbles to it. Eventually the bowl is so full that you can't even see the high-quality marbles anymore. You've got all these marbles. Some are great, some are meh, and others are totally worthless. The problem is, if you spread your investments across too many things, you can end up diluting your returns. Concentrating your investments in the areas you believe will perform best can actually lead to higher returns. For example, if you heavily invest in tech stocks, which you believe are going to skyrocket, over-diversifying with bonds or international stocks might hold back your growth potential. Bonds? Meh. If you put too much of your money in low-risk assets like bonds, you might miss out on the high growth potential of stocks. It's the classic trade-off between risk and reward. So some folks argue that while diversification can reduce risk, it can also reduce your ability to earn high returns if you spread your investments too thin. So what's the middle ground? What if I told you that you can have the best of both worlds? The key is strategic diversification, meaning you diversify your portfolio, but you do so with intention. Instead of just adding random assets to your portfolio for the sake of diversification, Focus on assets that work together and complement each other. If you're heavily into stocks, maybe add some bonds to balance out the risk. If you're already in real estate, think about commodities or even international exposure. Think about your investment goals and what you're trying to achieve. Are you looking for steady growth, income generation, or maybe you want to take on a little more risk for the potential of higher returns? Your diversification strategy should align with your goals and not just be about throwing everything at the wall and seeing what sticks. So, how much diversification is enough? That's the million-dollar question. Well, it depends. For the average investor, a diversified portfolio could be as simple as a mix of stocks, bonds, and real estate. But for more experienced investors, you might want to throw in some international assets, commodities, or even alternative investments like private equity. The key is to balance growth and risk in a way that makes sense for you. Too little diversification, and you're exposed to unnecessary risk. Too much, and you could be leaving returns on the table. So there you have it, the great diversification debate. Some experts say it's the best way to reduce risk and smooth out returns, while others argue it's a way to water down your potential gains. And then there's the smart approach, diversifying with intention based on your goals and risk tolerance. At the end of the day, you are the one who gets to decide what's best for your portfolio. But hopefully, this video gave you some food for thought, and maybe even a little bit of a laugh along the way. If you enjoyed this video, don't forget to hit that like button, subscribe to the channel, share, and let me know in the comments. Do you think diversification is the key to investment success, or do you have a different strategy? See you next time, where we'll keep breaking down the world of investing, one strategy at a time.